Hi, and welcome to the Stock Scores Market Minutes for July 30th, 2018. This week's topic, big profits when trends change. Some of the more profitable trades come when the trend of the market changes. What happens is that many investors are crowded on one side, and when that change comes, they have to rapidly reverse their positions with a break of trend. So if you're in an upward trend, everybody's long of stocks, and then when the trend breaks, you have people running for the exit door all at once, which sets up for good short sells. And by the same token, downward trends where everyone's feeling fear, when the trend bottoms and turns up, you have a clamoring to get to the entry door to buy bargains. So this leads to sharp price moves that are much more profitable because you get a quicker move in a shorter amount of time. Now, emotionally, it is hard to take these trades because everything that you see in front of you when you look at market activity from recent trading tells you to do the opposite. You know, if the market's in a downward trend, it's hard to be a buyer. But if you can wait for the sign that the trend is changing just at that turning point, then you can start to really take advantage of those big profits that come when trends change. All right, let's get into this week's market analysis. And here we have a chart of the S&P 500. We're in an upward trend there. We could also draw the trend line like this. And if we drew it like that, you could see that that was broken. I think this is the more accurate trend, the one that I drew first. And so at this point, we are holding that. We are basically holding the gap up from support. And notice on Friday, there was some green candles there at the later part of the day as the buyers tried to defend that support zone. So it's still in an upward trend. I'm going to give it a neutral rating because I'm a bit concerned that we could break the trend near term. But for now, I remain bullish, but only slightly so. I would say it's neutral to bullish right now. Moving along to the longer term chart of the S&P 500, you can see that that long-term upward trend line is still in place. And therefore, as a long-term investor or long-term trader, you should still be long of the market. Moving along to the Russell 2000, this is a daily chart of the Russell. We are essentially in a pattern of consolidation. There's more volatility on the left, and we are condensing that volatility. Now, we had a pretty strong sell-off day on Friday, but we did not break that support line. The market should therefore bounce early next week and move back up toward the highs. If it does not bounce, if it breaks this upward trend line, then you want to be a little bit cautious, but the next level of support is not that far down, so it may only just creep through that. We'll have to see how it plans out. I want to be a little bit careful right now and see how trading action goes early next week. On to the TSX. TSX chart essentially sideways over the last few weeks. We were in an upward trend. We took a pause. We trended up again, took a pause. So we're just kind of taking these step ups with pauses along the way. And as long as this support zone isn't broken, I would remain fairly optimistic, but short term I'm still going to say neutral because we are testing that support zone. On to the longer term chart of the TSX, and you can see that we broke out from that cup and handle pattern a few weeks ago. We haven't gone anywhere since then. We're just slowly creeping higher. Keep in mind, it's a slow summer market. There's not a lot of excitement in the summer, but the optimism is generally there. TSX Venture, no optimism here. Small cap, micro cap stocks in Canada in a downward trend, and this market best avoided right now. 20-year treasuries, you can see that the prices went lower in the last 2 weeks. That means interest rates have gone higher. Looks like we're going to retest support, which we hit a few times now, more or less, once, twice, 3 times, 4 times. Let's see if we get down there and bounce again. But until that downward trend line can be broken, I would remain cautious with the expectation for interest rates because there is an upward bias to interest rates, which means a downward bias to the price of bonds. Moving along to the US dollar, it's been condensing for the past few weeks. This is a weekly chart, and you can see that we're just building a little consolidation pattern there. Will we break out or up or down out of this pattern? Given that the trend is up into it, usually you get a breakout in that situation, but be cautious if we get a sharp move down. That would lead to some weakness. Again, I lean towards a bullish outlook for the US dollar. And that is, of course, bad for gold, and you can see that gold has been doing poorly, really has done nothing for the last few years, but in the last few months, trending lower, and there is no sign of it stopping. There is support in this area, so it should stop, but it hasn't broken any downward trend lines yet, so I would be pretty opposed to being long of gold or gold stocks. And here we have the chart of oil in an upward trend. Fair bit of volatility, runs away, pulls back, runs away, pulls back. We ran away, now we've pulled back again. We probably hold that upward trend line. I only would get worried about the price of oil if that upward trend line is broken to the downside. For now, remain bullish for oil. And finally, fear. Fear been pretty quiet. You can see there was a little bit of a jump in fear on Friday. It didn't hold the gains for the day, and so that indicates to me that it's probably just a short-term bit of weakness for the market, but I'm going to be watching things closely Monday and Tuesday to see how it holds support on the stock market. All right, so my ratings then: US stocks bullish, neutral short-term. It's probably slightly bullish short-term. Canadian stocks bullish long-term, neutral short-term. Gold bearish on both time frames. Oil bullish long-term and neutral short-term. US stocks pulled back Friday, and that threatens the short-term upward trend line. We may see further profit taking near term, but until that trend line is broken, I wouldn't get too worried about it. Canadian stocks are stable, but they really lack the buyer motivation that comes with the summer. Oil remains in an upward trend long term, but it is choppy short term. Lots of whipsaws in and out. Gold should still be avoided. As I said, fear jumped slightly on Friday, but not a big concern yet. All right, let's look at the next chart, which is a short sell chart from Friday on Apple. Now the upward trend line, near term, very short term upward trend line for the 2-minute chart or actually the 13-minute chart on the SPY, the S&P 500 ETF, that was broken at about 10 o'clock in the morning on Friday. And at that point, you really want to start looking for short sell opportunities because that short-term trend was broken if you are a day trader. And this is one that came after that time. Now we've had a nice upward move lately, but after 10 o'clock, you could see the market starting to roll over, weakness building, and along comes great trading opportunities like this short sell in Apple when we had a bearish action candle breaking down through support from a pennant, from a downward sloping pennant, and that is a great day trade, a stock scores day trade setup that led to a pretty good sell-off into the close, maxing out at 8 RR and finishing just under 6 RR for the day. Now all of that came because there was a trend reversal for the S&P 500, and it was just a piling on. Lots and lots of stocks generated exit signals, and most of them did quite well. Well, that has been the Stock Scores Market Minutes for July 30th, 2018. To learn more about the Stock Scores approach to trading, go to stockscores.com/learn. If you like the video, click on that like button, hit subscribe if you are not already subscribed, and most importantly, have a great week in the market and trade well.